let's get stuck into our next plenary session, and we're going to hear the banking perspective now and why financial institutions are taking such an active interest in carbon farming and emissions reduction. So joining us is Will Aylett. He's the NAB Agribusiness Manager for Yorke Peninsula, South Australia, based in Kadina. He's been with the NAB for about 6 years, starting as a university graduate and then previously served as the Agribusiness Manager for the Barossa Valley, where he actually grew up. Today he will share his insights on the future of agri-finance in the context of emissions reduction and how NAB and the broader finance sector support primary producers engaged in carbon farming. So please join me in welcoming Will to the stage.
All right. Thanks for having me, and thanks for that introduction. Before I kick off, I'd just like to say I was glad to see on one of Louisa's slides she had on there who's here to support. She had the banks listed as here to support farmers through this topic, and that's very much the case. So I think the theme that I'll speak about today is that the banks, NAB specifically, but the banks industry more widely, we are here to support you. And not to be afraid of the bank and some of the questions, I guess, that we may be asking. So I'll get into it. We've got it down here. So just a brief agenda. So I'll just run through, why is it important to the NAB? What are some of the things the NAB are doing? Now, I'll try and speak about the industry more broadly. Obviously, I'll probably speak a lot about the National Bank because that's where I'm from and that's where the information I've got is from. But what is the industry doing? Both in terms of, I guess, some funding investment and some tangible support for customers. And then if I've got some time at the end, I'll just speak on some opportunities, transition opportunities that we're seeing with some existing customers. So I might just go back a slide if I can. Well, I've gone past it now, but why does it matter to the bank? Well, there we go, thank you. I think you can see in the red box there, the obvious answer is we've got the finance industry is reliant on farmers and agricultural businesses to support their own businesses. So the NAB specifically lend $1 every $3 to Australian ag. I think there's over 100 billion lent to all farms across the country as an industry. So we're heavily invested in the industry. Why carbon and environment and climate specifically? Well, no secret to anyone here. This is a graph of reported natural disasters by type from 1970 through to basically till 2023. No secret which way it's going. The weather's becoming, or the climate's becoming more erratic, extreme. What does this mean for farmers on the ground? Well, things are becoming harder, right? Farming's changed, we all know that in a lot of ways. Some of the physical risks that farms face, we all face weather, obviously weather and commodity prices are the main two, but they're all tied into this. We're seeing it, the impacts become greater. So obviously the bank's got a vested interest in coming along for the journey with that. So if I go to the next one, here we go. So if anyone's a banker in the room or an ex-banker, they'll be familiar with this. So what are some of the things the bank thinks about when we're lending money? We always look at this, so the 3 C's of credit, character, collateral, capacity. I'll probably put capacity and collateral the other way around, so case number 1, capacity, collateral. Probably fairly self-explanatory, but character, what are we talking about? Well, what do you like as a person? Who are we lending to? Collateral, look, for a farming business is generally, people probably think about it from a security point of view, but we're talking about the asset base. The asset base for probably most people in this room is their farmland. And capacity is, how profitable is your business? Is your business viable? Can it repay the debt that we're lending out? So if we're starting to think about this through a climate lens, we're probably starting to think about things like, if you're looking at character, we're starting to think about, well, what are our farmers thinking about? Are they attending things like this today would be an example. But we're probably starting to ask some questions around, and I think it's been touched on a little bit already. Are you planning for input efficiency? You know, things like water availability becoming harder in the future. How are you starting to think about that? Do we need you to have a rigid plan straight away? No, we don't, but are you starting to think about some of these things? Collateral, again, we're probably thinking here about what are you doing to protect that asset base? So that asset base is your farmland. What are the kind of things you're doing to protect that? So investment in soil quality, you know, things like fencing off waterways from livestock. Are you looking at some of these registered carbon biodiversity projects, natural capital on the land, things like that? You know, riparian vegetation, shelter. What do they call them? Trees. Sorry. So, bit of mental blank there. And then capacity. So again, I think we've heard a lot about ACCUs today. It's not all about ACCUs. That's probably very topical. But you know, that's something people are starting to think about, and we're seeing some early movers in the space. Probably some people in this room. You know, start to think about some of these things, or even just alternative income streams. You know, so it doesn't need to all be ACCUs. For instance, I've got a customer they've got existing grazing operation, beef and sheep, and they've started now bringing in pasture raised hens for egg growing, right? So just a way of sort of leveraging their existing asset base to probably not destock, but move a little bit away from the traditional livestock, have a different income stream there while leveraging their existing asset base, not having to invest millions and millions of dollars to buy more farmland or sell and move. All right, so I won't dwell on this slide for too long, but the question probably everyone always asks me, I get asked a lot, is are the bank going to start asking us for carbon data when, you know, we want to borrow money? The short answer is for basically for all family farms, no, not right now. And I can't see it being a thing we're asking for hardcore climate data in the next few years. The reason I included this slide is, and I'm not an expert on where this scale will go into the future, but I just wanted to highlight, obviously Australia does have mandatory climate reporting that is going to come in, targeted at large corporates initially and then filtering down to small and medium businesses. But we can see here that the smallest business on this scale due to come in the next few years, obviously after June 28, 100 plus employees, 50 mil plus in consolidated revenue. So a lot of farmers would have over 25 million in assets, but the 100 plus employees, 50 million in revenue probably knocks out a lot of the traditional family farms. And it's also it is still pretty difficult to start to collect some of this data. So no, if you come in for a loan tomorrow, we're not going to say, give us your carbon footprint. It's just an ongoing thing, something to start being aware of, I guess. So what is NAB doing? Coming up on time, but what is NAB doing specifically? So yeah, basically investment. So we can see here, we want to start upskilling, obviously, people that work for us. I'm sure other banks are doing this too. I'm sure the broader industry are doing this kind of thing. So, you know, partnered with Melbourne University to start educating bank managers like myself and people who work in the bank about climate so they can have these conversations with farmers. Start doing some of this risk assessment. Probably the more topical one that I'll speak about in a moment is green lending, but also just the technology. So we know that, see down the bottom there, I think it's down for Map of Ag, there'll be a few other businesses. These are the kind of businesses that are starting to put these platforms together to help farmers record and identify their carbon data. So when the time does come in the future, they've got a platform there, they've got an ability to do it, right? So we're trying to invest in these businesses now to make it easier into the future when these things, you know, do need to be done. So green lending, basically Clean Energy Finance Council, so government-backed or government-owned finance organisation, have given, I believe, probably all the banks, but I know, given a large amount of money to NAB, basically to offer cheaper loans that qualify. I call them green loans. So the most common one, asset finance, fairly easy, straightforward. So things like you could imagine, like solar panels, EVs. You know, we've seen a 300% increase in EVs, EV vehicles over the last 3 years. I think it's now used to be, well, probably no surprise, used to be basically nothing. Now it's over 10% of our total vehicle equipment finance across the bank and growing. Basically, we can get a 50 basis point or 0.5% discount, and that's pretty easy to access. we also have the green loan, so up to 1.15% discount. This is a little bit more complex. Two types of projects. Group 1 project, you're talking about your sort of infrastructure projects, so solar and battery installation. We've got reforestation to generate accus. Pasture renovation with legumes is topical. I get asked about that a lot. Because a lot of people obviously are looking into something like that. I won't run through all the exact details, but essentially, look, max loan of 5 mil, max term of 5 years, so it has to be paid off over 5 years, and we'll fund half of the investment. So if you put 10 mil in to a reforestation project, we'll fund the whole lot, but we'll give you the discount on half of that if it's eligible. Group 2, probably more common. People can refinance existing debt that they originally took out for a different purpose, provided that the interest saving they have on that project that they want to get into, they have to spend the cash interest saving on methane inhibitors. So, feed, supplemental, things like that. They are regulated, highly regulated. Obviously, there's government money involved, and we want to avoid greenwashing, so we can't, unfortunately, just go out and give you the loan. But we certainly do have the options there, and I'm happy to chat to anyone one-on-one later if they'd like to get a bit more information around that. We're coming up on time, so I'll just whiz through this. I think we'll probably get some information about this later on the day. This is just some research on NAB's Help Fund. It's actually found that, livestock farms specifically that have invested in natural capital on the farm, they actually found a direct profitability correlation there. So I won't dwell too long on that, but again, speak to me after if you'd like to know a bit more about that. And then just some early movers. So Green and Beef, people probably know about them. They're a abattoir operating in Victoria and Tasmania. They've worked with their existing supply chain to essentially, they've sort of developed, I think in combination with the government, their own standards around, not carbon neutrality, but carbon reduction, and they've been able to then provide, I guess, a premium product off the back of that and provide their growers a higher price if they can sort of come along for the journey. So just an opportunity there where they've probably protected their supply chain with the transition and then also been able to provide some actual tangible cash benefit along the way. So I probably spoke very quickly, so but yeah, we've got a few minutes for questions. No worries.
Okay, excellent. Thank you, Will. I know it is very quick, but please, if you've got a question for Will, please raise your hand now. Yes, please, thank you. I'll just speak up now. I think by the time the microphone comes down, you go for it.
So, Joe Stevens from Elders. The question I had was, you mentioned if you walked into a bank looking for an agribusiness loan tomorrow or in the next 6 months, the bank's not going to ask you what's your carbon emission number or your climate risk as a business. But if you walked in tomorrow and you had your emissions baseline data and your natural capital assessment for your farm, would the bank give you a better deal?
They wouldn't give you a better deal on face value straight off the bat, but whenever a bank prices up a loan, obviously it's a combination of, well, it's about risk, right? So risk is calculated internally. We have a risk rating that we have to report up to our regulator, APRA. That comes about through a combination of historical financial performance. The 3 Cs, basically the thing I was talking about before, what you like as an operator and what your planning is for the future. So if you came in to see me tomorrow and you had all your data, as you said, and a big plan, well, I'm going to probably say you're a pretty good operator. The risk level is probably going to come down. You're probably going to get a bit of a cheaper rate through that lens. So it won't be because you've got that data necessarily, but it's all going to help going into the future, if that sort of makes sense.
Okay, one last question. Thanks, Louisa.
Hi, thank you. So how does the bank see this in the future? Is this, going to grow? Is it going to become a major part of your business, number one? And number two, what's NAB doing about their emissions? I understand they're a service industry, but however, yeah, thank you.
Yeah. So I answered the first half of that question. I think everyone knows that it's going to grow. I must admit, obviously, I don't have line of sight over to at board level around what the broader strategy is there, but it's going to grow. And I think some of that investment we're doing around education, upskilling of bankers, it is relatively new, but it is going to continue to grow. On your second question around emissions, I mean, look, to be honest, I'm the agri manager in Kadina. I can really only speak to what I'm seeing on the ground around some of this stuff with ag. So I probably can't really go into the emissions side of things. So appreciate the question.
Okay, I think we'll... Oh, one quick question, thank you. And then we'll leave it at that and have to move on.
Well, just a quick question about whether you're starting to see, like any standards appearing or specifications around how any of this kind of natural capital sustainability data is going to actually affect like our land values of farms. Like, is it going to be something that you're seeing like suddenly, on realestate.com, there's going to be something that actually gives you a bit of an indicator which is helping us to justify prices?
Yeah, it's a good question. I haven't seen it, no, right now, but I wouldn't be surprised. I mean, I think as land becomes more marginal is not the right word to use, but any land that's going to have a proven ability to generate a higher return, and as I said, we're seeing that lands with more natural capital essentially can do that. I wouldn't be surprised if we start to see that. It's probably, I could actually put you in touch with some commercial valuers if you'd like, and we can talk about that. Yeah.
Does that answer your question, Ollie? Okay. Well, thank you very much for your time. I know it was short and sweet, but appreciate the insight on what's happening in the banking world when it comes to carbon. Thank you.
I'll be around at lunch if anyone wants to.